The U.S. Trump trade agreement, a glimpse into upcoming tariffs and global trade dynamics. Get ready for a trade shakeup. Recently, global attention zeroed in on Vietnam when President Donald Trump announced a significant trade deal with Hanoi, just days before Washington's tariffs on Vietnam were set to return in full swing. So what does this new trade deal tell us about the future of tariffs and global trade? Under this deal, the U.S. will impose a 20% tax on goods coming from Vietnam, a substantial reduction compared to the steep 46% tariff Trump originally imposed in April. In a notable turn, American imports to Vietnam will not face any tariffs, making it easier for Vietnamese markets to receive U.S. goods. However, things get intriguing and perhaps a tad controversial when we consider the new 40% duty imposed by Vietnam on products that originate from elsewhere but then are rerouted through Vietnam before making their way to the U.S. This tactic, commonly called transshipping, has been a known strategy for countries like China to sidestep trade barriers. But here's where it gets controversial. Vietnam stands out as one of the rare nations to secure a deal with the Trump administration as the countdown on the 90-day tariff pause ticks away. Other nations are left pondering how their own trade relationships with the U.S. might evolve. Sebastian Radler from Bank of America commented, "This case indicates that we are likely to see increasing tariffs in the future, not decreases." Meanwhile, Mark Williams of Capital Economics noted that this deal might actually empower other countries to negotiate for a lower tariff than the 20% Vietnam achieved. After all, Vietnam had a particularly challenging negotiation position because of its heavy trade reliance on the U.S. Is there a silver lining for emerging markets? While this agreement provides some clarity and hints at future deals, economists at Citi caution that there could be more concerns than opportunities for Asian emerging markets. They argue the 20% tariff is higher than the 10% expected, suggesting that other nations may have to grapple with similar higher duties on transshipped goods. Countries like Thailand and Malaysia, along with South Korea, where factories have been established in Vietnam, could be particularly vulnerable. And this is the part most people miss. While Vietnam's successful negotiation could signal a shift toward more rough deals rather than comprehensive agreements, the U.S. seems open to such flexible frameworks. Could India, with its robust agriculture sector, be the next to clinch a deal? Tring 9 of Nateka CIB highlights that the agricultural sector could pose hurdles for India as it strives to provide the U.S. with greater market access. What about Europe's role in all this? The U.S. Vietnam deal's success doesn't necessarily guarantee a similar outcome for the European Union. Lavanya Venkateswaran of OCBC Bank pointed out that unlike Southeast Asia, Europe has faced its own set of challenges in trade negotiations with the U.S., with the latter frequently criticizing Europe's policies. Based on this complexity, Nguyen argues that Europe might have to settle for a 10% duty instead of the sought-after tariff-free status. Europe's ongoing and slow-paced trade talks with the U.S. suggest that a basic political agreement might be the best outcome for now, with unresolved issues like big tech regulations and differing global perspectives. Will Europe manage to find common ground with the U.S.? Share your thoughts and join the discussion below. What do you think the future holds for global trade agreements?